Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year. So the first thing that we want to do is open up our brokerage platform. The one that I like to use is tastytrade. However, feel free to use whatever you like. And of course, the instrument that we're going to be choosing is options. Specifically, we're going to be writing and selling these contracts. So it makes sense to know where we are in the current options cycle to begin with. So we just want to pull up any underlying. Let's just use Netflix, why not? And we simply want to. Netflix actually is looking. I'd never noticed this about Netflix until just now. But Netflix seems like it could be really good for selling premium. We're getting very steep and sharp increases and decreases, and it looks to be pretty consistent. Netflix is something we're going to definitely keep an eye on in the future. However, back to the point at hand, we just want to pull up any underlying here. We've got Netflix, and we want to pull up a list of expirations for the underlying. Now, we're presented at this point with weekly and monthly expirations. We want to stick to the monthly expirations, and we want to be between 30 and 60 days out in time. 45 days is ideal, but only if we can get that on a monthly expiration. So our first monthly expiration is November 15th, 21 days out in time. That is a little bit close. It's actually far too close. We want to typically be out of positions at this point at 21 days. So we're going to go to the next expiration, which is December 20th, 56 days out in time. And that's more suitable for us. So now we have this information, 56 days. We can come over to our watch list and we simply filter out anything that has earnings over the next 56 days. Now, once we've done that, we also want to filter out anything that has a low liquidity level. Both of these things will have a positive effect on your P&L once you have excluded the underlyings. So now we're presented with a list of things that we can trade, and we want to order the list from high to low on the IV rank scale. The reason for this is we want to sell or short premium when IV is high, and IV rank can tell us where IV is relative to itself on that specific underlying over the past year. So that's why we use IVR. And typically we want to stick to trading things with an IV rank of over 50. However, sometimes things over 30 can be deemed acceptable. So now we just go down the list and see what would fit well in our portfolio. Make sure your portfolio is nice and diverse. Use your common sense. If you've got a lot of tech positions, maybe look for banking. I don't know, something else if you don't already have a lot of banking positions. So just keep it nice and diverse. You can correlate things to the SPY. You can use beta weighting. You can use all this fancy stuff. And if you have a large portfolio, you might want to do all that stuff, but for most people, just use common sense and you'll be fine. So we go down the list. Anything with a forward slash is a futures underlying, and everything else is equities. So we want to stick with equities, not futures, for the sake of this video, and we just simply go down the list. So we can see here we've got EWW, which is a Mexico ETF, trading at just under $53. It's got an IV rank of 61.8 and an absolute IV level of 31.4%. I think we'll have a look at EWW. So we just want to come over to the trade tab here. And as we can see, with it being an ETF, there aren't any weekly expirations for this specific underlying. So we're just going to go with the December 20th here, as we've already established at the beginning of this video. So December 20th, and now we are presented with the options chain. At this point, it's very simple. We want to sell one call and one put. We want to sell one call, typically anywhere between 15 and 20 delta. So we've got a 19 delta here. And the same again on the put side, we've got a 17 delta there. And this puts us roughly at the one standard deviation mark. And we've got a 75% chance of making at least a penny on this position. if we hold till expiration. And if we don't hold till expiration, which we're not going to do, and we just want to get out at some point, within the 50% mark, we've got an 85% chance of that happening over the length of this trade, at some point over the next 56 days specifically. It is an unlimited loss potential position with it being naked. It only requires just over $500 in buying power to open this position, and we collect $1.22 per share, so $122 in total, which is a nice return on capital. This is an ETF, so it's not going to move as erratically as say Tesla or something. With ETFs, of course, you don't have company risk, so typically you will have less premium, but you're also not taking on as much risk. So ETFs are really nice, and they work really well as the backbone of your portfolio, especially if you have larger portfolios. And that's literally it. That is exactly how you can find positions. In previous videos, we do go over how you can manipulate positions to fit any size portfolio, but because this doesn't require much buying power, it would be perfectly fine to leave this position naked, and we wouldn't really need to do anything further to this here. There is one other thing that you need to keep in mind when you are sizing your positions, and if you don't know whether your portfolio can handle a naked position that's going to use up $550 or not, we've basically created a spreadsheet that is free for everyone to use. It's a position sizing template. It's very simple. You enter the size of your portfolio here, you enter in what the current VIX level is here, and then everything below will be automatically calculated for you. And this simply tells you how much buying power to allocate to any single undefined or defined risk position. As long as you follow this, you will be completely fine. Link is in the description to this. It's free for everyone to use. You just click on the free position sizing template and it will take you to where you need to go. If you want to get involved and learn more in depth of what we're doing and how we do it, and you want to see positions that we have in our portfolios, again, link in description, click on EDS Premium and then get yourself signed up. Inside, you will have access to all of our portfolios. You will have access to a full course that takes you from start to finish. No prior knowledge is required. There's a private community, so you can speak with myself directly and with other like-minded individuals. There's a 100% money back guarantee as well. So once you studied our full course and followed our trades for at least 6 months, and if at that point you haven't seen results, then we will work with you for free until you do, or you can simply request a full refund. So it's completely risk-free on your part. And right now it is only £1 a month to join. We are currently offering complimentary onboarding one-on-one calls for the first couple of people that join. And yeah, that's basically it. So you are rewarded for getting in early. The price will be increasing. Once you're in, you don't need to worry about price increases. You're locked in for life at that level, at that price level, as long as you don't quit and then rejoin at a later date. So with that being said, guys, I will see you all on the inside.